Okay, cool. Let's jump into it. Morning, sir. All right, let's jump into it. Futures. Well, we knew this was going to happen, and the simple reason that we are tracking futures or markets to the upside was simply because we knew that DXY we were tracking to the downside, right? So that all that happened. Now today is a fresh day, so this is what we were basing our case on for the markets to move higher, that DXY will move lower. And the reason that we were tracking DXY to the downside was because it was hitting the 8 year and started to push down. Now, where is it heading? Obviously, it is getting oversold here. So at some point in time, it will bounce. So we will look forward for that bounce. And to what degree, I don't know. Probably around 104 seems like a good area for it to bounce. And if this bounce happens, obviously, SPX or ES will give up some ground and then push to the downside. Now, to the upside, probably 104 is the limit. And if it clears 104, then probably we'll reassess into 104.45 to 104.50, and definitely not looking forward for DXY to move above this 104.70, 104.75 range. Basically, the 50 on the week, and also it is combined with the 8 on the week. So expecting this, not really, expecting it to come back up to 104 and not really expecting it to clear this 50 moving average on the week. And if it does, or if and when it does clear this 50 to the upside, that's where I'll start to take DXY seriously, probably into this number again around 106.18. But this is not the case as of now. As of now, probably a bounce would put DXY at 104, and then again it will push down. This would be an extreme if it hits 104.60, 104.70, the 50 moving average on the week, and if it does, then we'll track the SPX to the downside, right? And on the higher time frame, let's see. So if DXY starts to move lower, you can expect DXY to hit this 102.90 area, 102.90, 102.88, somewhere about. Let's round that up at 102.90. So expecting that to get tested, probably that's where we'll see another bounce. Expecting that to be an ephemeral bounce, and again, the bounce could last into 104. But after that, it has to come back down, very likely breach this 102.80 area, and probably move down into 101.70, 101.80. This is our long-standing target for DXY to come back down into. And we've been tracking DXY all this way up, and we were short the markets. The moment this happened, we were calling for a bottom last year itself, and as expected, this moved down. Now the expectation is for it to come back down all the way here to the mean. Of course, these lines are dynamic, and expectation is for it to come back and do the mean reversion at some point in time. Probably not a story for today, and it would largely depend on CPI print on Thursday, I guess. Yeah. So if if CPI comes in lighter than expected, I'm expecting DXY to crater all the way down here into 100, 150. That breaches, very likely it's going to go down into 99.50 or something like that. And if DXY takes this path to the downside, then obviously we are looking at the markets to the upside, SPX, ES, and all that stuff. So this is the chart that you want to be watching. Of course, this is what traders will be watching. But if you want to, if you want to, probably you want to track this chart, or rather predict this chart, you want to go on to this chart, right? So the 10 year. So and people watch. Some people watch. I watch 10 year because this is market control. Some people watch the 2 years. Some people watch the yield curve between 3 and 10. So yeah, it depends on how you watch the Fed movement. But this is basically what you want to be watching, because this is what is driving everything right now. And of course, this is what is affecting DXY, and DXY is pushing the market up and upside or downside, whichever way it is. And we've been tracking 10 year to the downside, and if it breaches here, we are very likely to see this number 3.42. I'm expecting this to hold around here for now, but then CPI comes in lighter than expected. This will come down into 3.43. and probably we are looking for a breach of that. And at some point in time, we are looking for a push down all the way down here, probably into 2.86. 2.72, 2.62, then very likely the mean reversion at 2.46. Again, this is not a story for today. Probably it will take some more time, and not sure when this is going to happen, but this has to happen, right? And we are still tracking DXY. Watch this trade here. The DXY is about to cross on the MACD to the downside. This is good for a longer term trend to form. Monthly DXY MACD is about to cross to the downside. SMI is already crossed to the downside. That is all good. However, there's one small problem here. If you look at this RSI, it has dropped down to its bottom of the range, and we know very well what happens when it comes down. RSI drops down to the bottom of the range. Usually, this is how it spikes up, right? And there you go again and again and again. So that's why we have our trigger RSI here, and it has come down all the way here. We just need to hit a major moving average, probably about 102.80 or something like that. That should do the trick. If that breaches, we are definitely looking for a bounce around 101.70, 101.80 area. So keep this in mind. And I'm watching I'm thinking that whatever bounce it would happen here, probably that is very likely going to be an ephemeral bounce. And DXY will keep pushing lower. Two conditions, well, that's going forward, and we'll keep discussing that. Earnings contraction, that's one thing that if that happens, then DXY will start to push to the upside again. I think Friday is when banks start to report, and if bank's guidance is anywhere anything lighter than expected, or going forward, then very likely you'll see DXY move to the upside, and we don't want to see that happen. We want to see banks report healthy numbers, or doesn't matter even if they don't report healthy numbers. We want to see bank guidance. We want to see bank guidance. We want to see, especially the global banks. We want to see those global banks do better, or at least expect to do better going forward into 2023, especially the second half. The first half is anyways going to be choppy and whatnot. If you have your technical sound, you will be able to survive the first half. But second half is what is much more concerning to us. Second half, the banks should say that they are looking forward for a normal return to some sort of normalcy going forward in 2023. And probably they are looking for the Fed to probably scale back in 2024. That's what we want to hear from the banks. And if that happens, probably DXY will start to move to the downside, and probably DXY will end up probably around here at 96. Again, this is not a story for today. This is not a story for next week, but this is what we are tracking to the downside. And MACD crosses to the downside on the month. That will make it a larger trend. Right. Let's get, and this is the chart that will drive everything. And what will drive this chart is this chart, right? The US 10. Obviously, the next step for US 10 is for it to come back down into 3.42. And if it happens today, I don't want this to happen today. To be honest, I don't want this to happen today. I want probably this cycle to probably take shape after CPI or during CPI sometime. Because if it comes down today, tomorrow, let's say, and it's sitting at 3.44 or somewhere around that, the monthly eight, then CPI, the navigation through CPI will become a bit tough. Because if the CPI comes in lighter than expected, then is it going to bounce from here, or is it going to crater from here? That question will remain, right? So we wanna see it linger around here till the CPI comes through, and on the day of CPI, perhaps drop down here. Then we can make an educated guess that it's going to push all the way down here. So that's the reason I was looking at the CPI print for this to hold into CPI print, and after the CPI print, probably crater down. All right, let's get next. And this is just a byproduct of these two charts, right? ES or SPX, whatever you want to watch. That is just a byproduct of US 10 and DXY. DXY by and large, but everything is pushing through this US 10 or US 2, whichever the one that you're watching, according to the Fed rate. Right, and here is the ES chart, and this chart will simply help you with the levels, nothing more than that. This is not the chart that you're actually trading. You're actually trading the 10 and the DXY, right? And this is just a chart where where you actually put your trades. But the idea is generated from the 10 and the DXY. This is a chart you just put your money on. That's pretty much it for this chart. Right. So that being said, look at the we've been tracking this for a while now, right? The MACD to the upside, this crossover to the upside, we've been tracking this for a while, and on the lower time frame, which is 1 day, well, lower time frame for me at least. So this is starting to curl to the upside. So this is starting to form time. This is starting to form a trend on a lower time frame. Couple of problems with this, but we'll discuss that later, not right now. To the upside, let's track it all the way into 3970, and also look at this chart. This is the weekly chart, and if 3970 clears, then we have a clean shot at 4018, 4020. Not really plotting anything above this 4020 today, and this is an extreme case again. uh, and then I'll tell you the reasons why. But for now, we are still tracking this to the upside, very likely 3968, 3970. So that would mean about 3948 area ish, 3945 to 3948 on SPX, right? And after that clears, then we are looking at a 4000 level on ES. And 40 well, beyond this line is pretty decent resistance. It has acted as pretty decent resistance throughout. So we are tracking this 39.99, or let's run that at 4000. That is a pretty decent resistance as of now. And let's go into the 1 hour chart. This is the chart where there is some problem, and we know what happens here very clearly. 5, then 8, then this is the line that you've been watching, 3927. Then the mean is at 3924. Not any plotting anything below 3924 right now, but if it breaches there, probably we'll see a push all the way down here into 3915. So that would mean about 38 38 90 3890 for SPX. But let's see. Right now, that is where it bounced off of the close, 3980 around 3995 area. But this is not the plan as of now. This is not the plan. Let's reassess the situation. If it breaks the mean on the 1 hour, 3924, this is the ES side. That would mean about 3900 on the SPX side of things. And I'm not discussing this chart more because there is more work to be done here, right? And we were looking for Apple to the upside, right? And we were looking for Apple to the upside for very good reasons. We have oversold conditions, especially with the MFI. MFI clearly suggesting there was a bounce coming, and we took that bounce. In fact, I almost full ported into it. So the upside, we said it's 130. Let's go here on the 1 hour chart. So this was the first thing that it had to clear, 128.20, 128.30. After that, we are still tracking it into test this number here, 130, 130. This is what I put out on Friday, 130.30. If that clears, very likely it's going to go hit this number here around 130, 130, right? So this is where it should start to take a breather. And after the breather, how deep of a breather? I don't know. Probably it will come back down into the same story here. The 5, about 129.90. Then the 8, probably we're looking for a bounce here. Then very likely push into 128.90. Right? I'm expecting it to hold this number. If that breaches, then we still have downside. The mean is sitting about 127.50. So and look at this, we know these work in cycles, right? Getting oversold here, took a shot, got overbought here. Look at the MFI; it's all the way up here. So we want to see this MFI come back down and probably start to move back up again. And this is the chart that would dictate the daily chart. Look at the MACD, and this is what the note I put out a couple of days back, that once the MACD crosses, last time it did that here, right about here, right? And let's look at the last time how much it rallied, all the way from this 135 to 155. Are we expecting that kind of a move in January? Probably not. Probably not. But that doesn't matter. For us, what mattered was we knew that it was going to bounce. We knew it was going to go hit in the five and the eight. Probably today we are expecting it 130 number. If that clears, the mean reversion would happen about 133.72 to 134. And on the weekly chart, the 5 is detached, 133.84. So 134 number looks a decent push to the upside. And if 134 happens today for Apple, then very likely SPX will that's a good 4 points, and SPX will very likely push all the way close to, I don't know, 3980 area. Very likely. But we still have some more work to do around 3950 area. So if that clears, very likely 3980 area expectation, 3980 area expectation from from SPX. And by the time 3980 is hitting on SPX, we'll see about the 4000 hitting on ES1 right about here, right about here. So this number, the 4000 number, the 200 moving average on the daily for ES, this number will prove to be a pretty decent resistance. And if CPI comes in lighter than expected, I'm expecting this resistance to blow through and probably push all the way into 4070 and perhaps end up somewhere about here at 4100. 4200 remains, 4150 to 42 still remains a decent possibility post a CPI, and very likely this is where it is going to end up. Right about here, the 50 moving average, and this is 4050. So expecting this is the expectation from CPI, post CPI rather, and if it clears this number here, then obviously we're looking at 4150, then 4200, and not really plotting anything above 4260 as of now. Things where things stand. Again, I think this is a stretch. Of 4270 is a stretch as of now, but let's reassess the situation to the upside after 4050 clears. Basically, the 50 moving average on the week. And look at this chart. Right. So this is the chart that was guiding my push all the way up here into 3930 area, rather 3912 to 3915 area on SPX, right? We'll look at the SPX chart as well. So now this chart, this was bound to get hit, and we got that number. And if it clears here, then we're looking for a push into 3970. If that clears, then we're looking for a push all the way into 4000. Look at the same chart here for SPX. Right. So this chart. So to the upside, we'll hit this number. Probably will open above this number, and probably somewhere between this number, the 21 on the week, and then probably 3920. Somewhere within these two lines will open up. And if it clears that lines, and then we are probably looking for a push all the way up here into 4016 area. But that is not the chart that I'm interested in. I'm interested in this chart. This is the monthly chart, and the upside, and this is the reason I was looking at that 3913 area close. We if it closed above there, then very likely the chances, or rather, if it moves above here, right now it is SPX will open above here. Very bright chances of it going all the way up here into 3950. This is where I'm getting my 3950 from. The same story, five clears, then the eight gets hit, and this is just we're playing on the higher time frames, right? So either chances of reject from the five, or then you have the eight. So either one of these are major moving average where it will reject. How deep of a reject, I don't know. But if it clears both of these, then very likely chance of 3995 to 4000 getting tested are very bright if it clears this eight on the week, eight on the month, sorry, 3950, 3955, and bright chances of this 4000 to 3998 get tested. Here it will, the chances of getting a reject here are bright. If that clears, the chances of it rejecting here are bright. And if that clears and the CPI comes in lighter than expected, the mean reversion is expected to happen. This is where people are getting their 4200 from. about 4200, 4210. So the mean reversion on the month is at about 4200, give or take, right? So this is where the people are getting their 4200s from, and it's been a long standing resistance. Very likely it's going to go hit that number and start to push to the downside. And if that's the CPI story, and let's say the earnings start to come in lighter than expected, like what Lulu did today, and then very likely it start to push to the downside, probably come back down here and breach all the way down here. And if Apple starts to break, then very likely it's going to come back down here. Probably this is the story for, I don't know, Q1, a March April story. If it starts to breach to the downside, 3600, probably this is where the story is going to the downside. I for right now I don't really plot anything below this, and if it does breach this 50 moving average on the month, then very likely that would mean that the panic is about to set in. 3300, and probably this is a stretch 2960, but this needs to be kept in mind, because to the upside, this is what we had, right? Clearly, we were way too overbought on the month, and then probably if that cycle happens to the downside, that it gets way too oversold to the downside, then this is where likely it's going to go 29.7 to 2970 area. But that is not the base case. This is not even an extreme case. As of now, looks like the China is reopening very nicely. The government is behind the Chinese firms. China property market, they are propping it up, and they are trying to take measures that the real estate developers are uh, paying their obligated debt, and things are going smooth over there. Government is trying to take a major role in how that is playing out, and very likely right now they don't. The government right now is not in under any political pressure. The party congress is done. It's a new term for Xi, so I think he's going to do pretty much. Uh, he's going to come through on his word. That's what I'm thinking. And if China reopen goes smooth, then very likely oil will stabilize. And I think that will translate very well into global demand. And if you want to keep an eye on global demand, watch oil and copper, right? Those are the two things you always want to be watching. And of course, gold. And the simple trade here would be if you see DXY calming down, and then you will see gold moving up, right? This is the chart that you want to be following. There you go. Right? This is a simple trade, very, very, very simple trade. DXY moved down, gold moved up. Right. And this is where we were looking to buy gold. And if anybody did, you did very good. Right. Apple to the upside, not really plotting anything above 133.80 to 134. And Apple has to be traded on the lower time frames first. On the month, on the what do you call this? On the 1 hour chart. Very likely we want to see a push into 130.89, 130.90, and start to take a breather there. And after the breather, I'm still tracking Apple to the upside, probably 132.30. And the first test would be about here, right about here. 131.50 area will be a test. But if we have MACD crossing to the upside on the daily, this will start to form a trend. And this will bode very well for SPX. Cool. What else? DXY 10-year oil. Let's get into some Tesla here. Tesla, we knew it was going to happen 117. We knew there was no, pretty much that push from Apple solidified that. And now here it is a major resistance point. And again, the same exact thing with Tesla. It needs to cross this MACD to the upside. If it and look at the MFI, it was all the way down here, and that's the reason we were looking for a technical bounce. If the selling subsides, then we have Tesla mean all the way sitting at about 136. This is where I'm getting my 136 from, and very likely, if this if the selling from an institutional side is done, then very likely we're going to hit this number. Probably not a story for today. Story for today perhaps could be around 128 area. But look at Tesla here. This is very, very, very oversold. If it starts to push to the upside, this is also suggesting 136. Probably this week. If everything goes well, the CPI comes in as expected, lighter than expected. Probably 136 to this area, 153 area will get tested with Tesla. I'm expecting it to test this number at least 136. Again, depends on CPI. Then very likely, if it clears here, the bright chances of 150, 153, and this 165 area should act as pretty decent resistance for Tesla. If it hits that number, probably, and again, this is not a story for probably even this week or next week. We'll see what happens after Tesla clears. If and when Tesla clears this number here, 136 area, then we'll reassess it to the upside, probably into 153. It should act around first. If it clears here, which it is clearing, then very likely 128 area resistance. Then we'll reassess the situation, probably all the way up here into 135, 136. Tesla crossover needs to happen. Let's go look at Tesla here on the lower time frame. Yeah, I'll be a. This will be a cautious trade for me to the upside. I am heavily involved still with Tesla. So let's see. Yeah, looks like it's going to go all the way up here, but I don't think it's going to go do that in a straight line. Overbought conditions, very likely a breather, then probably again push to the upside. If it starts to take a breather and then the 5 is sitting at 116.25, then after that the 8, and very likely it's going to look for a bounce around 113, 114 area. This was acting as resistance. And 113.80 is what I was looking at, and this is the reason for that, right? And then if it comes back down, breaches below here, then we are looking for a push all the way down here into 110, 110.70 area. But looking for a bounce around here, then the same story, 5, 8, and then probably we'll look for 113.80, 113.90 will be a critical spot. That breaches, then 112.60, then very likely it's going to go down into 110, 111. Cool. Anything else in particular? Anybody looking at? To confirm, you're not plotting below 38.90. As of now, yeah, as of now, correct. But if it happens, then we'll reassess that to the downside. And my charts are, I mean, the data is not yet populated. If it starts to come back down, then probably the 200 moving average on the 1 hour 39.10 area, that should act as pretty decent resistance. And very likely after that 38.80. So basically, what I'm looking at the chart. This is the chart I'm looking at, right? So same thing. If it starts to push to the downside, this will act as pretty decent resistance. 39.10 that breaches, very likely 38.90, then 38.84, then very likely 38.73. Obviously, these lines are not accurate as of now. These lines are dynamic. As and when the market opens, the data populates, and these lines will adjust itself. So basically, looking at the 200 moving average, that breaks the 5 and then the 8. Mean is sitting all the way down here, 38.47. This will move up as the market opens. All right, 2 minutes to open, and let's move into live trading.